Americans today don't have an earning problem. Well, we have a spending problem. What I mean by that is the earnings are fine. Some of us are bringing in four, five, $6,000 a month net wise. And you telling me that you can't live off just making 50K a year? You telling me that you can't live less, you can't live on less than you make? The reason why so many people are struggling financially is not because of their earnings, but it's because of the choices that they make with their money. They're spending recklessly. They're not saving any money. Saving and investing is one of the most important things you could do, especially saving. Because number one, here's why saving is important. There's a saying, save that money, and one day that money gonna save you. When you put up $100 every week, that's good. You're saving money, not for a material item, but just because life can happen at any moment. And that's why you need an emergency fund, just in case you lose your job, or your car breaks down, or something happens where it requires you to take time off work, or anything, because life can happen at any moment. Life can change at any moment. Things happen. And what you're going to do when you lose your job, or just things happen in life, you're still going to need money. Because as you don't notice, the world revolves around money. Money is one of the most important things. Like, people make me kind of upset. Well, not upset, but it's like when people say money is not important, that's like saying that food is not important. And the reason why I say that is because you need money, because you need food to survive, right? And you need money in order to have a house, in order to have a car. You need money in order to have clothes. You need money in order to have just the basic things in life. Saying money is not important is like saying the needs in life, like food and shelter, are not important at all. Because it's up there. In order to have those things, you need what? Money. And that's something that people don't know how to manage their money. They don't save. As soon as they get their money, they spend it. I'm not talking about paying bills. They're spending it. They're spending it. Some people just spend it and hope they have enough money left over for bills. A sign that you're overspending is that you keep having to max out credit cards. And not even that, but you can't even pay the balance off in full. Here's a rule about credit cards. If you don't have the money for the purchase in the moment, don't buy it. If you know you can't pay it off when the statement bill comes without accruing any interest, don't buy it at all. It's that simple. If you can't afford it, then don't buy it. If you don't have the money for it, then don't buy it. Because debt is one of the worst things that you can have financially. Debt is just like a chainsaw wrapped around your neck. And it just keeps getting bigger, and bigger if you don't know how to manage your money. And the reason why it's important to invest, because at some point you're not going to want to work any longer. And that's when retirement accounts come in, taxable brokerage accounts come in at. Because at some point you need to make your money work harder for you. And that's one of the rules about money. Learn how to invest. The thing about investing is that you need to be in it for the long game. Don't be in all this day trading cryptocurrency stuff. It's too much volatility. Because you're just putting your money into one basket. Versus what you need to do is invest in an index fund, a low-cost index fund. Something like the S&P 500 or the NASDAQ. The S&P 500, inside of it is the 500 largest companies in the world. So when you invest in that, you're basically buying a share of each company. And a shareholder, you become a shareholder, which means you basically own part of the company. So this is the time where we need to become financially educated, because we don't know the war in Iran is going on. That's causing gas prices, gasoline prices, and oil prices to raise and go up even more. And I was watching a video about this lady, how she said she has to put her gas on credit. Let that sink in. You have to put gas on credit. From my experience, gas could run you about 25 to 40 bucks on a full tank. Now, depending how long that full tank gas will last you, will depend on how much you spend it in gas mile, depending on how much you drive your car and gas mileage and stuff like that. It depends on the car they're making, the model, in the year, and things of that nature. Let that sink in. When you got to the point where you can't even pay for gas in cash, but you have to finance it, that should wake you up. That should make you realize, I might gotta start making better decisions with my money. If you got that bad financially, you gotta, at that point, sometimes you gotta just seek some help. You gotta just seek an expert, or you gotta just seek financial advice. Because these banks ain't gonna help you. The banks, they want to make a profit off you. And they do that by keeping you guys in credit card debt. Credit card debt is the worst type of debt you can have. Somebody told me, I do my research, but the average credit card debt interest rate is 16%. That's more interest that's earning than on your high yield savings account. High yield savings accounts will pay about 3 to 5% interest. At times, the stock market don't even return on the 16% in some years, and you got an interest rate of 16% on a credit card, and it's gonna keep growing and growing and growing and growing. Credit card debt comes from people who just don't know how to spend wisely. They spend recklessly. Now, one thing about me, I'm a saver and an investor. But I don't save and invest all my money. Yes, I still spend, but I don't spend recklessly. I don't spend to the point where I have to take out loans just to pay back that loan. I'm not spending to the point where I'm maxing out my credit cards. Another thing too about credit cards, in a way to build your credit score, keep your balance low. Keep your balance. Try to keep it under 30%, but to really boost up that credit score, keep under 10%. For example, let's say your credit limit is $1,000. 30% of $1,000 is $300. So that means if you want to keep your credit utilization ratio, which is 30% of your credit score, you don't want to use no more than $300. But ideally, don't use $300 if you know you can't even pay back the $300. Because the quickest way your credit score to drop is if you're not paying the balance off in full in every month. The second you miss a payment, that interest rate's gonna start dropping. Interest rates gonna start occurring. And it's gonna keep compounding and compounding and compounding. And it's gonna take you a long time to pay off that credit card. And another thing too, when the bank charge you interest, half of your payment is not going towards the principal. It's going towards the interest. The bank is not telling you that, because again, they're seeking to make profit off of you. Versus the bank paying you by just saving your money, by just keeping it in a high yield savings. Not all of it, because you need to invest it. You need to invest it into a stock market, because you can't be sitting on too much cash. And I'll probably make a video about that later. Why sitting on too much cash is dangerous. But one thing we got to do is we got to just learn how to manage our money, just save and invest it. Because it's so crazy how a person who's making $50K a year, single, no children, living got a moderate, or they don't have moderate lifestyle, if they don't know how to save, is still struggling. Like, I don't understand how people that's bringing in about like 50 to 60K a year is still struggling. And you single with no kids. Like that's crazy to me. Like, I never understood that. But that comes for we don't know how to manage our finances. Financial literacy is so important. It's not enough to be financially educated, because you could have all the knowledge about something and still not know how to apply it. Financial literacy is just knowing how to make sound decisions. That's what it's about. And you need to pay yourself first. Don't pay your bills first. Pay yourself first. You'll be surprised on how much, on setting aside just 10%, for just allocating 10% of your income towards savings. You'll be so proud of yourself, and you'll look up in the course of 2 or 3 months, be like, wow. Because that's what it is right there. It's just simple money habits that people gotta change. As soon as they get their money, they're buying jewelry, they're buying shoes, they're at the mall, they're at fancy restaurants. And they spending like there's no tomorrow. If you're a person who is struggling to pay their bills in 2026, it should really alarm you. Because I got news for you. Inflation is only going to continue to grow. The stock market might even crash because of what's going on in Iran and how gasoline prices are going up. So now is the time, especially where you got to start allocating your money towards savings, getting out of debt. You got to do both. You got to save, invest, and pay off debt. Save, invest, and pay off debt. Stop buying all the shoes. Stop buying all the jewelry. Stop buying all the stuff you don't need. No, you can't do that right now because you're in debt. You gotta get out of debt first, because debt is one of those things that will stress you out. I don't like that. I'm not a fan of that. I learned from other people's mistakes. I seen how debt could quickly stress them out. Like, why are you out here getting a car note? All you need is some reliable to get from point A to point B. You don't need the newest version. You don't need a new car. You just need a car that drives. A lot of people make bad decisions when taking out a car loan, and you don't realize how bad it really is. And sometimes a lot of people, they finance it for so long that what they end up doing is they get into an underwater loan situation. Underwater loan basically means where you owe more than what its original value is. And the thing is, when you get a car note, when you finance it, some of it is going towards interest. The general rule about cars, if you can't pay it off in 1 to 3 years, you shouldn't be financing it at all, because at that point you're buying too much car. And you definitely don't want to buy a car than more of what your yearly salary is. Because that's where people make mistakes at, and that's how people get their cars repossessed and all that. And a car repossession stays on your credit report for 7 years. And the thing is with a car repossession, you still have to pay the car note, and you have to pay to get it back, because the car is in your name, so it's still your responsibility. It's still your financial obligation to pay. But what you need to do is get a notebook. It's simple math. It's simple math. As soon as you get your paycheck, sit down for like 10 or 20 minutes and see where your money is going. See where you could cut back at. See where you could just eliminate. See what you could do. See what cash flow you could free up so you could start allocating some money towards that savings. And then once you get that 3 to 6 month emergency fund, then you could start investing in the stock market. Then you could start building wealth. Because understand this, cars don't get you wealthy. Shoes don't get you wealthy. Brands like Gucci, Dior, Prada don't get you wealthy. What gets you wealthy is starting a business, investing in the stock market, and real estate. Because that's what builds long-term wealth. We focus on looking rich rather than building assets. Let me say that again. We focus on looking rich rather than focus on building assets. I use my money to make more money. A lot of people use their money to look like they got money. And guess what? But guess what? You could do that only if you're saving and investing. And by all means, spend your money. If that's what you want to spend your money on, then do it. I'm not trying to tell nobody how to spend their money. But what I am trying to get you guys to understand is the importance of saving and investing, and the importance of saving your money, and the importance of not overspending. Because when you overspend, it leads to debt. And debt could cause financial stress. So stay out of debt and save that money, and one day that money gonna save you. And get financially educated. Stay blessed.